Well, I'd be embarrassed too if I invested billions of dollars into a company and all I got was this lousy t-shirt.
Xbox, Twitter, Uber,
Postmates,
Netflix, MoviePass, Google, Facebook, eBay,
DoorDash,
Apple, Amazon, Airbnb,
The Apptrepreneur. Hey everyone, this is Kevin the Apptrepreneur. If you are new here and this is your first time, you want more videos about Uber, the gig economy, apps, the streaming wars, all that fun stuff, click the subscribe button and subscribe. We have almost daily updates and uploads, I should say, and live streams almost every Sunday. But let's talk about SoftBank a little bit, because SoftBank kind of found themselves in like a pretty interesting situation. SoftBank is a Japanese company that they're a conglomerate, and I don't even really know what they do. I've tried looking them up. I think they have something to do with telecommunications and cell phones or something like that. But the founder of SoftBank, or at least whoever the current head is, Masayoshi Son, I believe his name is, that he decided he wanted to be big. He wanted to be like Google. He wanted to be like Alibaba. And he decided to start doing venture capital funding. Now, the reason I know what venture capital is and I know a little bit more about that is because I'm reading that Super Pumped book, which we will be doing like a discussion on a live stream. So get it at the Amazon or Barnes & Noble bookstore and read it so that you can join in the live discussion. But venture capitalists, they've got a very interesting business strategy. They set aside certain amounts of money, and their whole goal is they go to companies and they try to get the companies in on the ground up. They give the companies money, essentially free money, for a stake in the company in hopes that, say they put like $2 million into this company, that $2 million will be worth $250 million in 5 years. Now, most of the time, they lose that $2 million. But hey, when one of them strikes big, it usually covers that loss. And that's what SoftBank was trying to do. They were trying to do that, and they were trying to do it big. And so Masayoshi Son started investing in the gig economy, kind of thinking that this would be the big thing, that would be the future. It might still be, by the way. We don't know for sure if this is going to completely crumble and fall apart, but I think it's heading in that direction anyway. And he seems to be at least a little embarrassed by that, because this article says SoftBank's founder is embarrassed and impatient with his investments after troubles with WeWork and Uber, and now he's telling founders to know your limit. Now, how much did he lose, and what's know your limit mean? Well, let's take a look at this. I gotta love it. So, Masayoshi Son, that's his name, founder of SoftBank Group, told Nikkei Business in an interview that he's embarrassed and impatient with where some of the company's investments are in 2019. Two of SoftBank's flagship investments, sorry, my nose is itchy, Uber and WeWork, have both been disappointing recently. Shares of Uber have dropped over 30% since the company went public in May, Fortune reported. WeWork fared even worse, canceling its planned IPO early this month. SoftBank invested nearly $11 billion into the co-working company, which was once privately valued at $47 billion. By the way, another interesting aspect about the Super Pumped book is that it talks about really the farce of private valuations. Like, a private valuation is essentially whatever the company says. As long as they can show that they are bringing in a lot of money, they can theoretically say the company is worth however much they want it to be worth. So the stock market is where the true value of the company is, and that's where a lot of these companies are being humbled a little bit, if you will. On September 26th, Son led the move to oust WeWork CEO Adam Neumann. So apparently Son was the reason Neumann is no longer there, and the IPO was pulled soon after the company was considering a valuation as low as $10 billion. Now, of course, $10 billion sounds like a lot to you and me, but yeah, they invested into what they thought was going to be an almost $50 billion business, not what was going to be a $10 billion business. And by the way, as reported in other videos, WeWork actually went to SoftBank to ask for like another couple $1 billion as kind of like a lifeline as they restructure their business. So, and this is the other problem with being a venture capital, is like sometimes you get stuck with a company that kind of becomes like an unreliable teenage daughter or even teenage son. Like, it doesn't matter, just a teenager in general who inherits a lot of money, doesn't really earn that money, and then when they blow it, they go back to mommy and daddy asking for more. So Sun says he's now warning founders that they can't do everything. Recently, I've been telling founders to know your limit. Knowing your limitations will help unleash limitless possibilities. WeWork's botched IPO and questions about the company's business model and leadership under Newman have damaged Sun's reputation. Now he's struggling to raise money for his second giant technology investment fund, Vision Fund 2. But Sun is still optimistic in his investments about SoftBank's future. It's only just beginning, and I feel there's tremendous potential here. His strategy is to invest in companies that see a world shaped by artificial intelligence. That's what a lot of people are banking on. Now, you might be asking, well, how much did Sun lose in his Uber and WeWork's investment? Now, I don't have it in this article. That's kind of, and my browser just froze. So, well, kind of. It's not, you gotta love technical difficulties there. Yeah, we'll just leave it there. Well, I don't have it in this article, but I have read that it's well over $5 billion. Like, he has personally invested over $5 billion in these two companies combined. And these are just two companies that are underperforming. There might be more that he's invested in that also are underperforming. Like, I think SoftBank did invest in either Postmates or DoorDash. I don't know for sure. I can't remember that off the top of my head. So fact check me on that one. If I'm wrong, I'm wrong on that one. Make a failed journalist joke. I will totally admit if I'm wrong on that one. But yeah, look, we all like to think that these conglomerates have like unlimited money. Like, they can throw money they can burn it. I've used that clip of Leonardo DiCaprio in Wall Street throwing money off the boat, and he says, "You like that? This is more money than you earn in a year. You know what I call these? I call them fun coupons." And there's probably some truth to that, but the thing is, it does run out at some point. And if you're investing that kind of money and you're constantly losing it, like, Sun might make his money back on his investments. I don't know about WeWork, but there's still a chance for Uber, which, trust me, that's high praise from me, because I don't think Uber is going to last much longer. Or at least not for another, I think it might last for a year or two, but who knows. But the thing is, he invested billions of dollars, and he's going to be taking a bath. I mean, what he essentially did was, he did what Leica did with Missing Link. He invested $100 million into something that he wanted to make money back, and they got back $26 million. And they lost money on that. Now it's on Hulu, by the way. That movie should not be free, but there you have it. So it's going to be interesting to see what happens from this point on. It's going to be interesting to see what Sun actually invests in from this point on. Like, he says he wants to do artificial intelligence. That could work. Artificial intelligence is becoming a big industry, but it's kind of been a big industry for a long time, and it still hasn't taken off the way it should have. But I mean, that's probably a better gamble than, say, a company or two where apps are their primary product, and all it's going to take is for General Motors or the Hilton or Amazon to realize they want to be in that business too, and to create their own apps, and then there's nothing special about your company anymore because some other company's doing what you're doing, and they've got other things to back them up so that they're unlikely to fail on that one. And what's interesting is, like, this kind of came like a day or two after some investment firm upgraded Uber to a buy, which I haven't talked about too much, and I won't get into because I'm kind of waiting for Lyft's earnings to come in, truthfully, because I think it would make for an interesting side-by-side comparison piece. But yeah, this comes shortly after they basically said to buy Uber. I bet you SoftBank is wishing if they were going to invest, they had invested now, because it's a lot cheaper to invest. But that's where we're going to leave it. What do you folks think? Do you agree? Do you disagree? If you were in his shoes, would you continue investing in these companies, or would you consider it a cut loss? I would love to know your thoughts. comment below, like, favorite, share, subscribe. If you enjoy my videos, consider becoming a Patreon member. It's totally optional, of course, but even as little as $1 a month goes a long way to helping the channel run smoothly, and you get access to my Patreon's exclusive blog. Also, if gas prices get you just a little down, check out the Get Upside app below. It's totally free, but you get cash back on every gas purchase. If you want more content from me, check out my other channels, Kevin T. Rodriguez, the Apptrepreneur Vlogs, and Autograph Hound. And finally, if you want to talk to me or other fellow rideshare drivers, investors, gig economy, whatever out there, check us out at the Apptrepreneur Hangouts on Facebook. And as always, flame responsibly. Have a good one.